Unity Software Inc., the real-time 3D content platform. The Unity engine powers approximately 70% of top-grossing mobile games globally, paired with Vector, an AI-driven advertising platform.
After the 2023 runtime fee crisis, CEO Matthew Bromberg is executing a turnaround. Q1 2026 showed strategic revenue up 35% and adjusted EBITDA up 65%.
Unity was founded in Copenhagen in 2004 by David Helgeson, Nicholas Francis, and Joachim Ante, originally as Over the Edge Entertainment, renamed Unity Technologies in 2007.
The 2020 NYSE IPO raised $1.3 billion. The 2022 IronSource acquisition for $4.4 billion added mobile advertising, though integrating the two ad platforms proved difficult.
September 2023, CEO John Riccitiello announced a per-install runtime fee, triggering mass developer backlash and migrations to Godot and Unreal. Riccitiello was forced out. Bromberg hired in 2024.
Grow Solutions generates 66% of revenue. Vector, Unity's AI-driven user acquisition platform, replaced the IronSource ad stack and grew 72% year-over-year in early 2026.
Create Solutions, the Unity engine, is 34% of revenue through subscriptions. Unity 6, released in late 2024, is the most significant engine update in years.
FY 2025 revenue reached $1.85 billion, up 2%. Gross margin held at 74%. The net loss narrowed 50% to $402 million as turnaround costs declined.
Q1 2026, revenue $508 million, up 17%. Adjusted EBITDA $138 million, rose 65%. A $279 million non-cash impairment from exiting IronSource drove a GAAP loss.
Unreal Engine, owned by Epic Games, is Unity's strongest competitor on AAA console and PC titles. Godot open source gained significant share during the 2023 runtime fee crisis.
AppLovin is Unity's main competitor in mobile advertising, widely seen as having outperformed Unity in ad tech execution. AppLovin's Max mediation platform dominates mobile in-app advertising.
Unity's moat is engine ubiquity. 70% of top mobile games creates deep workflow lock-in. Migrating from Unity to Unreal or Godot requires significant rebuilding investment.
Unity's engine is used by developers in over 190 countries, with the strongest communities in the US, Europe, China, Japan, and South Korea.
Mobile-first emerging markets, India, Southeast Asia, Brazil, and Latin America, are Unity's fastest-growing developer regions. The Vector AI platform reaches mobile game players globally through publisher partnerships.
Matthew Bromberg became CEO in May 2024, recruited specifically for turnaround expertise, having previously led Zynga as COO and co-founded Major League Gaming, pioneering competitive esports infrastructure.
Bromberg holds a Cornell BA in English and a Harvard Law JD. He canceled the runtime fee within 4 months of joining, re-establishing trust with Unity's developer community.
Unity, the real-time 3D platform, $1.85 billion in FY 2025 revenue, powering 70% of top mobile games through the Unity engine and growing the Vector AI advertising platform as the primary margin driver.
Q1 2026, revenue $508 million, up 17%. Adjusted EBITDA $138 million, rose 65%. A $279 million non-cash impairment charge from exiting IronSource drove a GAAP loss, but strategic revenue grew 35%. GAAP profitability is targeted for Q4 2026.
Unity Software. Roughly half of all mobile games ever made were built on their engine, and the global developer community they serve is truly enormous. But the company nearly destroyed itself with one catastrophically bad policy decision. Now it's fighting to win back the very developers it betrayed. Q1 2026 earnings are in. Did the comeback just get derailed?
Unity Software, ticker U on the NYSE, was founded in 2004 in Copenhagen and is now headquartered in San Francisco. The company makes the Unity game engine, the development platform that powers roughly half of all mobile games globally. If you've played a mobile game in the last decade, there's a better than even chance Unity built the invisible foundation underneath it.
The business runs on two segments. Create Solutions is the crown jewel, the game engine, editor, and developer tools that studios pay subscriptions to use. Grow Solutions is the monetization and advertising arm built largely on the controversial ironSource acquisition. Think mobile ad networks, in-app bidding, and user acquisition tools. The company employs roughly 5,000 people and currently trades at a market cap of about $11.7 billion.
All right, let's get into the numbers. Q1 2026 revenue came in at $508 million, up nearly 17% year over year, compared to $435 million in Q1 2025. That is genuine revenue growth, and it did beat the Wall Street consensus estimate of roughly $502 million. Revenue beat. Check.
Now here's where it gets ugly. Gross profit for the quarter was $157 million. That sounds fine until you realize it implies a gross margin of just 31%. Lana, in the 4 prior quarters, Unity's gross margin was running between 61 and 74%. This quarter it dropped to 31. That is not a rounding error. That is a structural collapse in unit economics.
And it flows straight into operating income. Operating loss for the quarter was negative $351 million, an operating margin of negative 69%. Net loss was negative $347 million, and the headline EPS number was negative 80 cents per share. The analyst consensus had been expecting positive 24 cents. So actual EPS came in a full $1.04 worse than expected. That is not a miss. That is a crater.
Here's the silver lining that might keep investors from completely panicking. Free cash flow was actually positive, $66 million in Q1. Operating cash flow was $71 million. So the cash generation engine is working, even if GAAP accounting is painting a brutal picture. Unity also holds $2.1 billion in cash against $2.2 billion in total debt, so they are not facing an immediate liquidity crisis. The debt-to-equity ratio sits at about 0.7. They have runway. But that gross margin story demands an explanation, and the company needs to provide one.
Let's talk about the man in charge. Matt Bromberg became CEO in mid-2024 after John Riccitiello's forced exit in the wake of the runtime fee disaster. Bromberg comes from EA Mobile, where he ran operations. He has actual developer DNA, not just a financial engineering background, which matters enormously when your primary job is convincing 2 million developers to trust you again.
Let's dig into the two segments. Create Solutions is where Unity's identity lives. The game engine is used to build everything from indie mobile hits to mid-tier console games. Developers pay subscription plans, from free hobbyist tiers up to enterprise licensing. Unity has been investing heavily here in AI tooling, Muse for generative content inside the editor, Centis for running machine learning models directly in games, and what they call AI Lego, modular AI building blocks developers can snap together. The pitch is that Unity makes building AI-native games faster than any alternative.
The question for Create Solutions is whether Unreal Engine is eating their lunch at the higher end. Epic's Unreal has been gaining traction, not just in AAA console games, but increasingly in film production and even mobile. Unity has historically dominated the indie and mobile markets, but as mobile game budgets grow, some studios are making the jump. Unity needs Create Solutions to stay sticky, and the AI tools are the main argument for why a developer would stay rather than switch.
Grow Solutions is the other half of the business, and the problem child. This segment handles mobile advertising, in-app monetization, and user acquisition. It was built through the $12.6 billion ironSource acquisition in 2022, a deal that many viewed as strategically questionable even at the time. Mobile advertising markets have been compressed by Apple's app tracking transparency changes, which gutted the data signals that mobile ad networks depend on. Grow Solutions has been the drag on margins.
The gross margin collapse this quarter almost certainly reflects significant charges in the Grow Solutions segment, whether impairments, restructuring, or accelerated cost recognition. Until management provides a full segment breakdown, the most likely culprit is the ironSource-derived advertising infrastructure facing write-downs. The fact that revenue held up while gross profit cratered is the diagnostic fingerprint of one-time charges, not ongoing operational failure, but investors need confirmation.
So what's the bull case? Start with the moat. Half the world's mobile games run on Unity. That installed base of developers does not migrate overnight. The switching costs are real, training libraries are enormous, and Unity's asset store ecosystem is massive. If Bromberg can stabilize developer relationships, that base is highly retentive.
Add the AI angle. Unity's position inside the game development workflow gives them a structural advantage for embedding AI tools. If Muse and Centis gain meaningful traction, Unity could command higher subscription RPU without depending on ad market recovery. And mobile gaming as a category keeps growing globally. Emerging markets in Southeast Asia, Latin America, and India represent enormous future TAM that Unity's engine is already positioned to serve. The free cash flow positive quarter also suggests operations are more disciplined than the GAAP losses imply.
Now the risk side. The runtime fee controversy was a trust fracture. In September 2023, Unity announced a retroactive per-install fee on games already shipped. Developers who built entire business models on Unity's pricing suddenly faced unexpected costs. The backlash was extraordinary. Studios pledged to migrate, and a Unity office reportedly received a bomb threat. The fee was reversed, but the message, that Unity might change the rules mid-game, does not wash off easily.
On the financial side, the EPS story is genuinely concerning. Analysts were modeling positive 24 cents. The company delivered negative 80 cents. That is not a guidance miss. That is a disconnect that suggests either massive undisclosed charges or a fundamental misunderstanding of Unity's cost structure by the sell side. Either way, it erodes confidence. And stock-based compensation at Unity has been running extremely high relative to revenue, which means GAAP losses significantly understate the dilution shareholders are absorbing quarter after quarter.
The competitive threat from Unreal Engine is real. Epic has been courting mobile developers with royalty terms that compete directly with Unity's subscriptions. Godot, the open-source engine, surged in adoption among indie developers after the runtime fee incident. Unity's share of the addressable market is under pressure from multiple directions.
Bull case in summary. If you believe in Unity, you believe that the gross margin collapse this quarter was driven by identifiable one-time charges, not a permanent shift in business economics. You believe that the $66 million in free cash flow proves the underlying engine of the business is cash generative. You believe that Bromberg has the credibility and operational skill to re-earn developer trust. And you believe the mobile gaming TAM, combined with AI-native tooling advantages, creates a durable growth runway.
Analysts seem to lean constructive. The Wall Street consensus on the stock is buy, 18 buy ratings, 8 holds, 0 sells. Price target consensus is around $36 against a current price near $27. That implies roughly 30% upside if the recovery story plays out. The 52-week range tells you how volatile this stock is. It traded as high as 52 and as low as under 17. There is massive spread between the best case and worst case scenarios here.
Bear case in summary. If you are skeptical, you look at that gross margin chart and see a company whose unit economics are fundamentally broken. And you worry that the charges this quarter are not one-time, but the first visible signal of deeper deterioration in the ironSource advertising business. Mobile advertising may not recover meaningfully for years, and the segment Unity paid $12 billion for could be worth a fraction of that today.
You also look at the EPS miss and question what the sell side actually understands about this business. When consensus is positive, 24 cents, and actual is negative 80 cents, that is not noise. That is signal. It suggests the financial models analysts are using are wrong in a material way, and wrong models mean wrong price targets, which means the $36 consensus could be just as divorced from reality as the original EPS estimates were. Bears would say, stay on the sidelines until management provides a credible, verified explanation for this quarter's numbers.
On the analyst front, the consensus is buy. 18 buys, 8 holds, 0 sells, with a mean price target of $35.77, above the current trading price near 27. High target 55, low target 27. That spread says everything. This is a high conviction story in both directions, and the market has not decided which side wins.
Here's the bottom line. Unity's platform is real. Half the world's mobile games run on it. But this quarter's gross margin collapse rattles the recovery story. Bromberg has the instincts. Now he needs the clean numbers to back them up.
Q2 will tell us whether this was a one-time stumble or something worse.
We're Hudson and Lana. See you next time.
This content is for educational and informational purposes only. Nothing discussed here constitutes financial advice, a recommendation to buy or sell any security, or an offer to invest. Always do your own research and consult a qualified financial professional before making any investment decisions. Charged Alpha does not hold positions in the securities discussed, unless explicitly stated. Past performance is not indicative of future results.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.